Welcome back to the BL1 webinar series. So in the previous webinar, we went through financial accounting and environment around this financial accounting, and we went through theory part of it as well as 14 MCQ questions from some other exams. Here, from today's session, I am planning to discuss with you, again very important topic, impairment losses and the allowance. Sometimes you are not familiar with this word called impairment losses and allowance, but you will be familiarized when we go through this content. What do you mean by impairment? Basically, don't forget, there is an accounting standard for impairment, which is called LKS 36, asset impairment, right? So there we will calculate a recoverable amount and carrying amount. When carrying amount is higher than the recoverable amount, yes, you have impairment. In short, the same technique will be applicable, same logic is applicable here also. Impairment means that excess of recoverable amount, carrying amount than the recoverable amount is the impairment, right? So if I use simple example to explain this, right, the definition of impairment is this. You have a carrying amount of debtors. Here basically we are talking about debtors impairment. This is applicable, this definition is applicable for all, but here we will discuss what? Definition of impairment. Let's say you have a recoverable amount of carrying amount of asset 100. Recoverable amount 80. Right? Let's say data, this is a data. This is a data. You sold goods to ABC company 100 worth of goods you sold 6 months ago, let's say. The value 6 month value of that invoice 100 rupees. Now you understand, we might not be able to recover 100, but we can recover maximum 80. Understand? Your original outstanding value was 100. Wow, rupiah 100 badu vikka. Have දැන් වාට තේරෙනවා because of some other factors, right? මට 100ක් recover කරන්න බෑ. Maximum I can recover only 80 rupees. The balance 20 identify as what? Impairment loss. Impairment loss. Make it up impairment loss කියලා. Is it a big word? It's a nice word, but simple to understand. If carrying amount is higher than recoverable amount, realizable value, always you have what? Impairment loss. There is an accounting standard for this, LKS 36. That standard will talk about asset impairment, basically property, plant and equipment and cash generating units. Property, plant and equipment impairment explained there in LKS 36. But in this topic we are talking about debtors impairment. This impairment will be explained as SLFRS 9, financial instrument. But both impairment. LKS 36 also talked about asset impairment, debtors impairment, receivable impairment, explained there in SLFRS 9. Whether it's SLFRS 9 or LKS 36, definition of impairment is what? When carrying amount is higher than recoverable amount, the difference you identify as what? Impairment. Simple, no? Don't misunderstand. Property, plant and equipment asset impairment covered from LKS 36. Receivable impairment we cover through SLFRS 9, financial instrument. In both standard, they talked about impairment. Whether SLFRS 9 or LKS 36, impairment means carrying amount is higher than recoverable amount. Recoverable amount means realizable value. You have 100 data outstanding, but you can recover only 80 rupees. Balance you have to identify as what? Impairment loss. Simple. Understand? Is it a difficult thing? No, very simple. Right? Fine. Look at this slide. Impairment loss means an impairment loss is a debt which is not expected to be paid. You are not expecting to be paid it back to the company. He will never pay me. If so, you identify that as what? Impairment loss. They are written off as an expense in the statement of profit or loss account. That impairment loss you will charge to where? Profit and loss. So in this example, 20 you will charge to where? Profit or loss account. Double entry will be there in the screen. Look at that. SLFRS 9, financial instrument. Double entry for impairment loss is debit impairment loss account, credit trade receivable. Now the carrying amount of trade receivable 100, that is there as a debit balance in your receivable account. How do you record impairment? 20 credit to receivable account, debit to impairment loss account. මෙතනින්ම අපි කතා කරලා ඉවරයි impairment එක. Very simple. Right? Impairment means that. Double entry also very simple. ඔයා කියන්නේ ඔයාගේ භාෂාවෙන් මොකද්ද? Bad debt. Bad debt is the impairment. Bad debt written off, which is called impairment. Double entry is what? Impairment loss account debit, receivable, credit. Look at this example. Read this. Impairment loss example. Fast car minicab service sends an invoice for rupees 300,000 to a customer who is subsequently disappeared from his office premises, never to be seen or heard of again. You have a cab service and you send 300,000 worth of invoice to one of your client customer. That customer is not there in the office premise and never seen and heard of even again. The debtor rupees 300,000 must be written off. No option, you have to written off. It might seem sensible to record the business transaction as revenue as 0. But you can't do like that. That's why I mark it as wrong, cross mark, right? Red color you can see, right? So you can't record revenue as 0. Why? Because you have a revenue transaction. Thereafter you have to subsequently recognize what? Impairment. Oh, it's not right. There's a revenue of 300,000, but when you send that invoice, no one is there to accept that invoice. No point of recording this transaction. Yes, impact is 0 to the P&L. There is no impact to the P&L. Why? Because sales, if you even record sales 300,000, subsequently you charge same 300,000 as impairment to P&L. So net impact is 0. Therefore, you thought of recording revenue as 0. No, you can't do like that. First, you record revenue transaction as what? 300,000 sales credit, receivable debit. That's the credit sales transaction, double entry. Subsequently, once you identify impairment, how do you record it? Debtor credit 300,000, debit impairment loss. That is how do you record this transaction in your profit or loss account. Look at this board. I will use T accounts to explain this for better visibility. So then, if you don't understand this properly, you will understand, right? Fine. You have two accounts here. This is sales account. This is receivable account, which is debtor account, right? How do you record initial transaction? Sales credit, receivable 300,000, receivable debit, sale 300,000. This is a double entry for sale transaction. Subsequently, you identify this debtor not in his office premises, and never seen or heard again. Then complete write off, right? How do you write off? Double entry I told you, you have to open another account called impairment loss. How do you pass double entry? Receivable account credit, impairment debit. Receivable 300,000, impairment 300,000. Always go with double entries, right? So then your receivable balance will be 0. There is no receivable balance in the balance sheet. If you look at P&L impact, profit and loss account, 300,000 sale value is there, and from that profit and from our sale to the P&L again, another 300,000 impact is there from impairment. So finally you will charge this to P&L, 300,000. This is also to P&L, 300,000. So net P&L impact will be 0. Because of 0 impact to the P&L, you can't say no point of recording sales or receivable, we'll ignore this transaction. No, you can't do like this, right? It should come in this way around, this way. First record sales transaction, then record impairment, then transfer impairment and sale to profit and loss account. Simple. From this, there are many questions we can figure out that will be discussed under MCQ question session, right? Moving on to the next concept. Debt written off and subsequently paid. Sometimes you will write off debtors, but subsequently those will be recovered. How do you deal with that? So when you receive written off debtors again, double entry will be debit cash account. Anyway, you will receive cash, no doubt. Cash should be debited. Debit cash, credit, impairment loss account. You charge to P&L through impairment loss account, you debit impairment loss account. Now, when debtor repaid it, you can credit to that account. Through impairment loss account, you will take the gain to the P&L. Understand? Because P&L debit kare impairment loss account එක කරා, therefore credit also should take through that account. So when you receive written off debtors again, double entry what? Double entry is what? Cash debit, credit, impairment loss. Fine. Read this. There's an example. Always in this chapter we have to deal with some calculations, right? Some complex calculation also will be there under MCQ. We'll go to those as well. For example, statement of profit and loss, profit or loss for Cube Cotton Company for the year ended 31st December 2005 could be prepared as shown below from the following information, right? You have inventory of 6,000, opening inventory. Thereafter you have purchase of goods 122,000. Then you have closing inventory of 8,000. Then you have cash sale of 100,000, and then you have credit sale of 70,000, and finally you have 9,000 impairment, and debt paid in 2005 which were previously written off as impairment 2,000, which we have written off in 2004, and other expenses around 31,800. So that's the summary of the transaction given in the question. Now the question is, you have to figure out the profit of the organization. Read the information there in the question again. So then we'll try to figure out then year-end profit. These are simple questions. We'll start from simple question, and future we will discuss some complex questions, right? Right. So first we will record sale transaction. Sales how much? 170. How 170 comes? Credit sales 100,000 and cash sales 100,000. 100,000 plus 70,000. 170,000. 170,000 sales. Then you have to figure out cost of sales. How do you calculate cost of sales? Opening inventory is there, opening balance of inventory plus purchase minus closing balance of inventory. Opening balance how much? Inventory 6,000. 6,000. Purchase how much? 122,000. And closing inventory 8,000 minus. So cost of sales 128,000 minus 8,000, 120,000. Cost of sales. So gross profit will be 50,000. 170,000 minus 120,000, 50,000, which is called gross profit. Very simple. So then you have to deduct expenses. Expenses. What are the expenses you have? Impairment loss of 9,000. Impairment. This is our topic. Impairment of 9,000, right? That will be debit to profit and loss account. But debt paid in 2005, which were previously written off as impairment loss in 2004. Even though you have 9,000 impairment, in that you have to deduct 2,000. Why? Because this will be a credit to impairment loss account. Right? Double entry, if you can remember, cash debit, impairment loss account credit, which means you have to deduct it from 9,000. 7,000 will be the total impact. Right? And you have other expenses of 31,800. 31,000, sorry, 7,000, 31,800. Right? So answer will be, right, 7,000 plus 31,800 will be 38,800 minus that from 50,000, 11,200 is the net profit. This is the net profit. Simple question, but what is the learning outcome from this? Impairment loss. When you recover already written off debtors, in this case 2014 you have written off to, some amount of debtors, in that 2000 you have recovered again. So then that amount should be credit to impairment loss account. That's the learning outcome from this question, right? Fine. Moving on. Allowance for receivable. Don't misunderstand, right? If you look at this slide, you have a different word. So far what we have discussed, impairment loss. Impairment loss means, go back to the definition, debt which is not expected to be repaid. I have highlighted the important part of the definition, not expected to be paid. We are not expected to be paid, right? We are not expecting. But loss allowance for receivable, adjustment to debt which unlikely to be paid. Impairment means expected to be, not expected to be paid. Not expected to be paid, here unlikely to be paid. Impairment means not expected to be paid. අපි බලාපොරොත්තු වෙන්නේ නැහැ paid කරයි කියලා. මෙතන allowance for receivable means unlikely to be paid. බොහෝ විට pay කරන්න නැති වෙයි. Not expected to be paid means අනිවාර්යෙන් definitely we know he is not going to pay. Therefore you charge to P&L straight away. Double entry, impairment loss debit, receivable credit. Allowance for receivable, we are not expected to be paid. That is not the case. Unlikely to be paid. Doubt එකක් තියෙන්නේ. Risk is there. Therefore, accounting for allowance for receivable is different from impairment. Right? What is that? Increase in the allowance for receivable is shown as an expense in the statement of profit or loss. This is one balance sheet account basically. Allowance for receivable means balance sheet account. You will make available, that is closing balance of allowance for receivable account in the balance sheet. You will deduct allowance for receivable account amount from debtors and present the net debtors in the balance sheet. But impairment loss, it's a P&L account. You will straight away charge to P&L. Whatever the increase or decrease in allowance for receivable, you will charge to P&L. But the closing balance is there in the balance sheet. You will figure out, we will deal with some more calculations. Don't worry. Trade receivable, in the statement of financial position shown net of receivable allowance, which means, right, look at this presentation in the balance sheet. Right. In your balance sheet, you have trade debtors under current asset. Let's say 100 in my example, right? If you have debtors and your expectation is not to repay, right, not expected to be paid by them, 20, you charge straight away to P&L, profit and loss account as impairment, right, impairment, right, straight away you charge that to P&L as impairment, P&L presentation impairment, 20 in my previous example, right. Why? Because you are not expecting any payment on 2 million, 20. 80%, so the balance is how much? 80. Right? From 100, 20 impairment, which charged to P&L straight away. So balance 80. From balance 80, 1% of it, let's say, not let's say 1%, 10% of it unlikely to be paid. 10% of it, which means 8, unlikely to be paid. 20% not expecting any single amount from this 20 million, 20 rupees, right? Not expecting any payment, not expecting payment from this, charge to P&L, 20. Out of balance 80, right, 10% of it highly unlikely to be paid, highly unlikely to be paid, right, which means 80. Now in balance sheet, debtor 80 balance is there once you charge it to P&L, right, balance 20, and this 8 rupees we will show as allowance for receivable. Allowance for receivable. 8. 72 will be the net figure, net debtors in your balance sheet. That's what this point is talking about. The trade receivable in the statement of financial position are shown net of any receivable allowance, net of any receivable amount, right? We call it as what? Allowance for receivable. Understand? So double entry T accounts we will discuss with the questions. Don't worry, understand the concept, that is more than enough. So in short, what you need to understand, impairment and allowance for debtors, two different things, right? Allowance for debtors means, sorry, impairment means not expected to be paid. You are not expected to be paid. Impairment means, sorry, allowance for receivable means unlikely to be paid. Double entry, if it is impairment, debtor credit, debit P&L, allowance for receivable amount, account debit, credit, where? Debtor account. Right, fine. That's a double entry. Any increase or decrease of receivable allowance account you charge to P&L. Now the last point in the slide, if you look at with the question mark, provision for bad debt. You are familiar with provision for bad debts. Very important, powerful message I am sharing with you, right? You can come to the right interpretation with this explanation. So far in your A level or some other exams, you will talk about provision for bad debt. Provision means what? According to accounting, provision means it's an liability. Provision definition is what? As a result of past event, you have a present obligation. When you settle that present obligation in future, there is a probable cash outflow, and that outflow you can measure in a reliable way. It's a present obligation as a result of past event, and there is a settlement in future. Here, provision for bad debt. To be a provision, is it an obligation of the entity? No, it is a receivable, not an obligation. Therefore, the use of word provision is completely wrong. Don't say provision for bad debts. This is not a provision. This is not a provision. According to SLFRS 9, this is what? Allowance for receivable, not a provision. It's an allowance for receivable. Understand it. So today onwards, there is no provision for bad debt. You have what? Allowance for receivables. It's not a provision. You can argue with anybody. To be a provision, it should be liability, and you should have an obligation. There is no obligation here. therefore it's not a provision, it's loss allowance, right? Double entry we have discussed. Example, read this example and we'll work out it. So from this point onwards, or more or less, we will work with numbers, calculations. Therefore, I recommend you to take a piece of paper, right, while you are watching this video and do this calculation with me. Why? Because no point of, some of you will think, this is MCQ, it's enough to listen to this video and watch this video, no need to do any calculation. No. In exam, you have to do this calculation, therefore, it is required to practice these things, right? By practice only you will figure out the answers. Therefore, take a piece of paper and take the calculator and do your calculations and check with my answer and see whether you are correct or wrong. Allowance for receivable. The business commenced operation on 1st July 2014, and in the last 12 months to June 2005 make sale of 300 million on credit basis and has impairment loss amounting to 6 million. There is impairment loss of 6 million, right? Cash received from the customer during the year raised 244 million, so that 13th June 2005 the business has outstanding receivable of 50 million, right? 50 million. Now pass the double entries for those transactions first before we move into second part of the question, right? I will use T accounts. You have receivable accounts, account, and you have sale account. So what is the double entry for sale? During the year of 2000, during the 12 months period, they have made sale of 300 million sale. So then receivable $300 sales credit. There are simple double entries, right? Sales. You can do these calculations and the exam also to figure out the answer, right? And there's a 6 million impairment loss. It is allowance for receivable? No, impairment. Impairment means what? Not expected to be paid. Not expected to be paid. That's the definition of impairment. What is the double entry? Receivable credit, impairment account, debit. So then open account, impairment. Impairment, right? Double entry 6 million impairment, which means 6,000, and debit impairment, debit impairment receivable 6 million, which means 6,000, right? So that is the double entry. And cash received from customers during the year 244 million. Cash received, cash debit, credit what? Debtor. Cash 244 million, 244,000. We are dealing with thousands, right? So then what is the carried down value? This is 300,000 300,000, carry down value 50,000. 50,000. Brought forward 50,000. Debtor brought forward value how much? 50,000. Right? Opening balance for next year. Now, let's say, for an example, second part of the question, right? For example, business determined that allowance for receivable at June 2005 is equivalent to 5% of 50 million. Your closing balance how much? 50,000. Out of 5%, you are expecting 50,000 out of 50,000, 5% unlikely to be collected, right? Unlikely to be collected, paid. Therefore, 5% you have to identify as what? Allowance for receivable. This means although total receivable balance 50 million, equivalent payment, eventual payment only 47.5 expected, right? Fine. So then another account you have to open, which is called allowance for receivable. Allowance for receivable, how much? 50,000 into 5%, 2,500, right? Which is credit allowance, 2,500. So your debtor balance in balance sheet will be how much? 50,000, 47,500 carry down value, right? So you will charge to P&L this 6,000 at the end of the financial year, charge to 6,000 to P&L, revenue also to P&L 300,000. So these accounts will be closed at the end of the year, there is no balance. So in the balance sheet 40,000, balance sheet, this is P&L presentation, net impact to P&L minus 6,000, right? 240,000 is the net impact to P&L. From sales you have deduct this, and to balance sheet net impact 47,500, right, by deducting loss allowance. Or else you can present 50,000 minus 2,500. So that is the presentation in this example. What I wanted to explain you, loss allowance will not charge to P&L. Increase or decrease next year, increase or decrease only will charge to P&L. Impairment will charge to your profit and loss account. So that's the double entry for loss account and loss account, allowance for receivable and impairment loss. Look at this next example. Frank and Mudit, I told you we will deal with more examples, calculations in these before we move into exam. So model paper questions, right? Fine. Read this. Right. Frank Mudita owns and run the Arabic health foods shop. He commenced trading on 1st January 2001, sorry 11 let's say, whatever the year, we're not worrying about the year of the company, right, financial statement. selling health foods to customers, most of whom make use of credit facility that Frank offers. Most of the sales are on credit basis. Customers are allowed to purchase up to 200,000 of goods on credit, but must repay certain portion of their outstanding debt every month. Every month you have to repay. This credit system gives rise to large number of impairment losses. This system, because of the credit facility, most of the debtor balances will be subject to impairment loss. And Frank Modither's result from his first 3 years of operations are as follows. First 3 operations are as follows. Year to 31st December 2001, gross profit 27,000, impairment loss 8,000, debt owed by customers as at 31st December 2001, 40,000, allowance for receivable 2.5%, other expenses 20,000. Year to 31st December 2002, gross profit 45,000, impairment loss 10,000, debt owed by customers as at 31st December 2002, 2.5%, allowance for receivable, that is the amount, other expense 28,750. Year to 31st December 2013 maybe, gross profit 60,000, impairment loss 11,000, debt owed by customers as at 31st December 2003, 30,000, allowance for receivable 3% on outstanding receivable, other expenses 32,850. So 3 years financial data they have given. The requirement is this: for each of those years, 3 years, prepare a statement of profit or loss account, loss of the business, and state the value of trade receivable appearing in the statement of financial position as at 31st December. For 3 years, you have to show what is the amount you charge to P&L and what amount you charge to balance sheet. What amount you will show in your balance sheet, right? Fine, simple. We have 3 years data. So you can try till I ready with the format. Read again and ready with data, right? Fine. Okay. We have 3 years, 2011, 12 and 3. 3 years, 2013 we have whatever the, let's say, don't worry about year, I told you, right? And 2000, let's say 12 and 2000. These are the 3 years. Finally, we have to figure out what? Amount you charge to P&L as well as amount you show in balance sheet, right? Fine. First start with sales figures are not given, right? They have given us what? Gross profit 27,000, 45,000 and 60,000. Gross profit. Start with the gross profit. These kind of questions can be tested in your exam, right? Different answers will be given and you have to select the correct answer. I told you, halfway studies will not help in this case. Why? Because the correct answer you have to understand. Select. If you do simple mistake, examiner don't know whether it's a simple mistake or whether it's a big mistake. Same output, right? But if it is a written paper, examiner can go through certain calculation. Right, only this answer is wrong. For balance answer, I can give you marks. That will not happen in this case. That is why I told you MCQ exams are not easy, especially for this kind of subjects when there is calculations, right. You can't show your calculations, fine. Then expenses you have to deduct, sorry, 45,000, sorry, 27,000, 45,000, 60,000, 27,000, 45,000 and 60,000, right, fine. So then from that you have to deduct expenses. You don't have regular expenses, but specifically since we are talking about impairment of debtors, you have debtors impairment balance, impairment loss. What is the double entry? Debtor credit, impairment, P&L, debit. How much? Impairment 8,000, 10,000 and 11,000. 8,000, 10,000 and 11,000. These are the figures, right? Impairment figures. Thereafter, you have loss allowance also. Debt owed by the customers at 31st December 2001, 40,000, out of which allowance for receivable 2.5%. So 40,000 Berlin. Now you have to take first year 40,000 outstanding balance, out of that loss allowance for receivable 2.5%, which is 1,000 loss allowance. Double entry, loss allowance account, debit, credit, debtor, 1,000. And you have next year 50,000 into 2.5, 50,000 into 2.5, 1,000 to 50. Closing balance 1,000 to 50. Understand, right? Loss allowance is not a P&L account, it is a balance sheet account. First year you charge it to P&L, correct, right? Entire amount you can charge to P&L, but let us say you have opening balance 1,000, closing balance of 1,250 now. This is the closing balance. Closing balance, right? Understand? Because at the end of second year 2002, this is 2001 closing balance. So this is 2002, right? 1,250. So balance only will be increase or decrease only will be charged to P&L, right? So this will be represented in balance sheet. So P&L second year you charge how much? 250. P&L what will happen? P&L debit, right? Here credit, P&L debit, 250 to second year. Third year loss allowance will be 3,000. Right? Loss allowance will be 30,000 into 3%. Sorry, 900. Right? Next year it's 900. Carry down value should be 900. Last year. So here brought forward balance of 1,250 because this will come to this, right? So then 1,250, 1,250. Here you have 350 to P&L. Now it's a gain to P&L. Here debit, credit to P&L. Gain 350. All these things are expenses, no? Sorry, since it is minus, only others are plus, right? Fine, correct. It's a gain to P&L. Understand? It's a gain to P&L. Why? Because the closing balance 9,900. Understand, right? First year this amount will be charged to P&L. When it's come to second year, the balance 1,250. Already you have 1,000. The difference will charge to P&L that we have discussed. And third year 900 would be the closing balance. There's a difference of 350. That will be a gain to profit and loss account. Right? Fine. Other than that, other expenses 20,000, 20,000 other expenses to P&L. First year you have 20,000, right? Altogether 29,000 total expenses. Next year you have 28,750, 28,750, right? So 39,000, right? 39,000. Last year the total expenses 32,850, 32,850. So then 43,850, 43,500 when you deduct 350, 43,500. Here 32,850, 43,850 minus 350, 43,500. So here profit, net profit 2,000, loss, net loss you have, right? Net loss of 2,000, 27,000 minus 29,000, 45,000 minus 39,000, 6,000 profit you have next year. Last year 60,000 minus 43,000, 16,500. So that's the answer, right? What you need to understand here, only when based on the closing balance, the adjusted figure only you charge to P&L, like this. Adjusted figure. It can be gain or loss to the P&L. දැන් ඉතින් මේ වගේ ප්‍රශ්නයක් exam එක අහන්න පුළුවන්. Right? What are the amounts you charge to P&L? These are the amounts you charge to P&L. What is the closing balance? 2001, 2012, right? Don't worry about years, I told you. 2003 in financial position. That also you have to show, right? That also you have to show. Debtors balance 40,000 each year end, 40,000, 50,000 and 30,000. 40,000, 50,000, 30,000. From that you have to deduct what? Loss allowance. First year you have 10,000. Second year you have 1,000, right? 1,000. Second year 1,250. Third year 900. Here 39,000. First year balance sheet data. Here 48,750. Third year 29,100. 29,100. So these are the balance sheet figures. These are the P&L figures. So how examiner can test this? At the end of third year, what's the amount you charge to P&L? මෙන්න මේ amount එක දෙන්න පුළුවන්. And what's the amount you should show in balance sheet? උත්තර දෙයක් විතර මේ දෙක දෙන්න පුළුවන්. Right? Similar questions they have tested in the SEC paper. Therefore, looks like MCQ questions are similar. But let's say if you have done some mistake one place, examiner will understand, right? Since he has done other calculations in a correct way, I can give you some marks. But this is MCQ. To end up with correct answer, all these things should be correct. Single mistake will end up with 0 marks. Understand the gravity, importance of what? MCQ papers. මේක වල හදලා පෙන්නන්න තිබ්බනම් මේ working එක දැක්කම පොඩි වැරද්දක් තිබුණොත් තවුලක් නැහැ. Let's say here අඩු කරනකොට මේක 16 නෙමෙයි 17 වගේ වෙලා. එහෙම නම් ලකුණක් දෙයි. But MCQ එකේ මේවා පෙන්නන්න බෑ. Therefore you are at a risk. Understand? Right? Fine. So this is the way you handle this kind of questions. Next part, accounting for impairment losses. Right? Another example, I told you we will deal with examples. Two concepts we have discussed already. Impairment double entry and loss allowance double entry we have went through. Now it's a matter of dealing with questions. Right? Look at this question. Read this. At 1st October 2005, business had total outstanding debtors of 8.6 million. During the year ended 30th September 2016, the following transactions took place. Credit sales amounted 44 million. Payment of various customers, payment from various customers 49 million. Two debtors 180,000 and rupees 420,000 were declared irrecoverable, and customers are no longer purchased goods from the company. Complete impairment. Right? These are to be written off. Requirement: prepared trade receivable account and impairment loss account for the year. So that's the question. Read it till I erase this board. So you can quickly figure out now the answers. Right. So you have to open few accounts, right? Trade receivable accounts you have to open, and the impairment account you have to open, right? Trade receivable account, and the impairment account. Right? Fine. 1st October 2005 outstanding debtor balance, opening balance 8.6 million. We will work out in thousands, right? We will work out in millions. That's sorry, thousands. That's easy. Opening balance 8,600. That's given, right? During the year, credit sales 44 million. Double entry, sales credit, debit, receivable. Sales. I am not going to open sale account, right? 44,000. 44,000. The credit entry, if you want, that's the end sale account. Right? That's the double entry. Payment from various customers. You have received 49 million cash. Right? Debit. Debtors 49 million. 49,000, which means cash 49. These are non-double entries. Simple. Right? Two debtors 180,000 and 480 declared irrecoverable, and customers are no longer purchased goods from the company. These to be written off. Impairment. Impairment debit P&L, sorry, debtor 180, 420. Here credit impairment 180, 420. Impairment double entry is that. Impairment account debit, P&L, sorry, debtor, credit. So what is the amount that you must shown in the balance sheet and P&L? So P&L 600 as impairment, balance sheet debtor amount how much? 44,000 opening balance together with this 52,600, 52,600, 52,600 carried down value. When you take the net of these, how much? 3,000. 3,000. So this is the closing debtor. This is the impairment to P&L. Simple questions, right? Fine. Next one. Next one. Loss allowance account, right? Alok Gamage has total receivable outstanding 31st December 2002 of 28 million. He has calculated loss allowance for receivable which amount to be 1% of this balance. Before now, he has not made any allowance for receivable at all. This is the first time they are going to make a loss allowance. On 31st December 2003, his trade receivable 40 million. He has recalculated loss allowance 5% of total receivable. What accounting entries should Alok make 31st December 2012 and 31st December 2013, and what figures for receivable will appear in the statement of financial position as of those 2 days. Simple question again, right? I will erase the numbers here. We will keep receivable account, or else we will start from the beginning. Right. So we have a receivable account of with 8 debtors, right? Opening balance 28,000. Previous question on impairment loss, this is loss allowance. Understand the difference also. And loss at the end of this year, 1% is the loss allowance. Allowance for receivable. Allowance for receivable 1% of debtors, right? Credit 28,000 into 1%, 280. 28 into 1%, right? And end of next year, right? 2003, total receivable balance was how much? 40. And he recalculated loss allowance 5%. End of his trade receivable, end of 2003, it was 40 million. So then double entry for this is what? So this is opening balance. The entire calculation is not important for us. So this is 2002, right? 2003 carry down kina apita 2003 wala tiyenne 40 million, 40,000, right? 40,000 luni, right? In that, repayments and everything is not there. Therefore, we can't figure out the entire chart of account, right? Therefore, we have to limit to our calculation. We have to limit our calculation to certain points. 5% is the loss amount, loss calculation, right? Carried down value would be 40,000. This is the initial charge, right? Into 5%. Now it will be 2,000, right? 2,000. 2,000. 2,000. So what is the net amount? 100,720, which is to P&L, right? We discussed only the net impact will be charged to P&L. Opening balance you have 280, closing balance 2000, only net impact will charge to P&L. Closing balance in the financial statement, right, balance sheet will be 40,000 minus 1,720. This amount will be represented where? In your balance sheet, right? Figure out the number and include that is there. So that is how do you deal with loss allowance as well as with impairment loss, right? Understand? Fine. Now we have done calculation for loss allowance, allowance for receivable as well as impairment. Those are the two key points that is there in the study pack. Now it's matter of discussing model questions from this area for us to take more confidence before the exam. We'll take ACCA questions. So all these questions are from ACCA exam, right? There are 17 questions. We'll see one by one and figure out the answer. At the same time understand how exam is going to test, right? Fine. I'll do those calculation in the board and we'll discuss the correct answer from other answers, right? Fine. Always we need to have debtor accounts and the receivable accounts and impairment account also, right? Three accounts are important. Impairment also, right? Fine. Read the first question. Now it's a challenge for you all, right? Many questions are there. You have to figure out answers for all the questions that is there in the question bank, right? And understand the way your examiner can test this topic in the exam also. All these questions are from ACCA, right? At 31st December 2012, the company receivable total 400,000 rupees. The total will be for opening balance 400,000. Opening balance 400,000. Opening balance 400,000. And the loss allowance for receivable 50,000. Opening balance is there for loss allowance also. Opening balance how much? 50,000. 50,000. It was decided to write off debt totaling 38,000 and adjust the loss allowance for receivable to 10% to the receivable. There is a impairment also. Impairment amount, debtor debit, credit impairment, how much? 38,000, right? Impairment, debit, debtor, 38,000, right? Then they adjust loss allowance to 10% of the receivable, right? 10% of the receivable. What? Now loss allowance. How much loss allowance now? Loss allowance 400,000 minus 38,000 into 10%, right? Loss allowance will be 1,000. Sorry, you have to calculate it. 10% of it now. How much? 400,000 minus 38,000 into 10%. 36,200. 36,200. 200 is the loss amount. So closing balance will be, right, closing balance will be carried down value 36,200. Here 50,000 is the balance amount, 50,000. So balance charge to P&L 13,800. P&L credit. Here P&L debit, this account debit, P&L impairment credit, P&L debit. So entire amount charged to P&L 38,000 as impairment, and there is a gain from loss allowance. This is gain. So this should be minus. Understand? මේ දෙක එකතු වෙන්නේ නැහැ. මොකද මේ වෙලාවේ gain එකක් තියෙන්නේ. Right? Opening balance, closing balance lesser than opening balance. So at the end of this year, the change is favorable to the company. Amount that you have recognized as loss allowance is lower than the opening balance. Therefore, this is gain to the P&L. Therefore, minus 38,000. 38,000 minus 13,800. 24,200. Right? 24,200. Which is the answer? Yeah. So answer is what? 24,200. Then ඔයා බලන්න මේ දෙක එකතු කරලා කී දෙන්නේ කියලා. So this is the mistake you do. Examiner smart. 38,000 plus 13,800. 51,800. 51,800. That is also there is an answer. දැන් තේරෙනවද exam එකේ තියෙන difficulty එක? වැරදිලාත් right. Impairment 38,000 මෙතනින් එනවා 13,800 both are to P&L 38,000 plus 13,800 together 51,800. That is the correct answer. Selector B. Completely wrong now. Because if you look at this chart of account, double entries, here debit, credit impairment loss account, debit to P&L. Here P&L loss impairment loss for allowance for receivable, debit, credit to P&L. Here debit, credit. එහෙනම් මෙතනින් එන්නේ debit entry එකක්, මෙතනින් එන්නේ credit entry එකක්. ඒක තුන මොකද P&L එකට? Net impact එක. You can't add those two, you have to deduct 24,200. දැන් තේරෙනවා exam එකේ test කරන විදියනේ? Right, fine. Look at other questions. Question number 2. Read it. Still I erase this. Now you should be able to handle these questions alone without my help. Right? Fine. Read the question number 2. At 1st July 2002, the receivable allowance was 18,000. Receivable allowance was 18,000. Opening balance 18,000. Opening balance 18,000. During the year ended 30th June 2000, debt totaling 14,600 written off. Written off means impairment. Right? Debtors. How much? 14,600. 14,600. Information. It was decided that receivable allowance should be 16,000 as at June 2003. June 2003 වෙනකොට closing balance කීයක් වෙන්න ඕනේ කියනවද? Right? It should be 16,000. No need to do calculate it. So then examiner is asking what? What is the amount should be appear? Q's financial profit statement of profit or loss for the receivable expense for the year ended. P&L amount එක ගන්න අපෙන්. Right? So closing balance according to them from loss allowance 2000 it's coming, right, 2000, right, from loss allowance, and impairment is there 14,600 debit here P&L, debit here credit P&L 2000. So then 14,600 minus 2000, very similar to previous question, but the way they have tested is different. 12,600, is there answer called to for 12,600? Yeah, there's an answer which is answer A. Then what තේරෙනවනේ test කරන විදිය නේ, MCQ උනත් very difficult because numbers are there. If you made a mistake, everything will be, the entire answer will be wrong, right? Fine. Read question number 3. As I promised you, you have question bank at the end of webinar series, right? From each and every topic, you may have questions like this from ACCA. At 30th September 2002, company allowance for receivable amount 38,000. Opening balance 38,000. Right, 38,000, which was 5% of the receivable at that date. Fine. When it's come to next year, at 30th September 2013, receivable totaling into 868,500. It was decided to write off 28,500 as irrecoverable. Impairment, how much? Impairment එකක් තියෙනවා 28,500, which is to P&L straight away, right? 28,500, right? Fine. And keep loss allowance for receivable 5% of total receivable. 5% of receivable. Now opening receivable, total receivable balance how much? 868,500 minus this 28,500 bad debt, right? 865,500 minus 28,500. This is a closing debtor balance, right? Out of which you charge 5%. 40,350. 40,350 is the 40,350 is the closing balance, right? Now they are asking what? What would be the charge in the statement of profit or loss account? You charge how much? 65,500 into 65,000, 868,500. 68, I made a mistake. Minus 28,500, 840. You also do the same mistake, right? You have to be careful. 42,000. 42,000, right? So closing balance 42,000. 42,000 is the closing balance. So 42,000 means 4,000 to P&L. Now this will be added to this. Here debit allowance for receivable credit, debit to P&L 4,000, right? 32,500 500 will be the answer. 32,500. Is there answer like that? Yeah. Last one. Answer is D, 32,500. Right? Look at question number 4 also. You can read. Right? Till I erase these numbers. Quick calculations, but important. Right. At July 2013, 1st July 2013, limited liability company had and loss allowance for receivable 83,000. Opening balance would be 83,000. Opening balance එකක් තියෙනවා. Right? During the year ended 30th June 2014, debt totaling 246,000 was written off. Written off amount how much? Impairment. 146,000 to P&L. 146,000 to P&L. $146,000. Right. Read the balance. At 30th June 2014, it was decided that the receivable allowance of 218 was required. 218. Right? Same question in a different ways they are interpreting. Right? Now they are asking what is the figure appear in the company statement of profit and loss. Simple. Now we have enough experience of doing this kind of calculation. 218, 218, 218 minus 83,000, 135,000. The credit there, debit P&L, 135,000 plus 146,000 is the total amount of P&L, 281,000. Is there answer like that? Yes. Answer is C, 281,000. Right? Fine. Question number 5. Not a calculation, but they are asking the double entry. A company has received cash for a debt that was previously written off. Which of the following is the correct double entry to record cash received? Have we discussed that? Yes, we have discussed. So straight away you can remove answer A and C. Why? Because anyway when you receive cash, cash should be debited. So B and D you have to read. B, cash debit, irrecoverable debt expense credit. D, cash debit, loss allowance for receivable credit. When you receive already written off debtors, cash debit, irrecoverable debt expense, which means impairment loss account should be credited. That's the double entry that we have discussed. Go back to, if I take you back to the relevant double entry, yeah, here, debt written off subsequently repaid, debit cash, credit impairment loss account, which means this, which means irrecoverable debt expense account. Right? Fine. Done. 1.6. Read it again. Read and understand. Right. At 31st December 2004, company total trade receivable 864,000, right? 864,000. Opening balance 864,000. The allowance for receivable was 48,000. Allowance for receivable opening balance 48,600. Sorry, 48,000, not 600. 48,000. It was decided that debt totaling 113 to be written off. Same way, 13,000. Written off, they have decided written off. And loss allowance and allowance for receivable adjusted to 5% of the total receivable. They are asking what is the amount there should be in balance sheet and the P&L. Right. So 5% from the outstanding balance. So then 864 minus 13,000. How much? 864,000 minus 13,000. 851 into 5%. 42,550 is the closing balance, right? 42,550 is the answer, right? 42,550, simple, right? So then opening balance you have 48,000 minus this amount, closing balance. So P&L amount 90,550 is the P&L amount. $48,000, sorry, not 90, 48,000 minus 42,550, 450, 5450. 450 to P&L, and not only the P&L amount, you have to figure out the balance sheet amount also. Here debit loss allowance, credit there. So then 13,000 from this minus, because it's credit, for 5450, right? 13,000. 7,550 to P&L. Yes. 7,550 to P&L. So then no need to read even balance sheet figure, but you have to calculate it. 8,640, right? 864,000 minus 13,000 minus, then 151,000 minus 42,550. 42,550. So then 808,450 should be the balance debtor. Harini. Opening balance එක දුනා මෙච්චරක් 864,000 එකෙන් 13,000 written off කරා. Then you have balance of 851,000. From that allowance for trade receivable you have to deduct. So then only you can figure out the net debtor balance. Right? Fine. So answer is what? B. Question number 7. Which of the following would be decrease in allowance for receivable result in? What will be the, which of the following would a decrease in allowance for receivable? Allowance for receivable decrease wenne මොකක් වුණොත්ද? Increase in liabilities. There's no liability. Decrease in working capital, completely irrelevant. Decrease in net profit. When you decrease, what will the decrease in the allowance of result? Understand the question. Which of the following would decrease in the allowance for receivable result in? Increase in net profit. When the amount decrease here, decrease. Allowance for receivable decrease. What will be the result? Net profit will be increased. Why? Because this will be credit to P&L here. By this amount, profit will be increased. So the answer is what? An increase in net profit. Net profit will be increased. When loss allowance decrease from 48,000 to 42,000, your net income has been increased from by 5,450. Right? Fine. So then answer is what? D. Read question number 8. Question number 8. The company has been notified that a customer has been declared bankruptcy. So customer has bankrupt. The company had previously made an allowance for debt. You have provided allowance for debt. Which of the following the correct double entry to account for this net information? Irrecoverable debt debit, receivable credit. Receivable debit, irrecoverable debt credit. Loss allowance debit, receivable debit, receivable debit, loss allowance, allowance for receivable debit. The correct answer they are asking. Correct answer will be A. What is that? Irrecoverable debt will be debit and the receivable debit. So why? Because your impairment double entry, which means that there is an impairment. So double entry should be irrecoverable debit, impairment account debit, receivable credit. 1.11.9, which means question number 9. An increase in an allowance for receivable 8,000 has been treated as reduction in allowance in the financial statement. Understanding is very important. An increase in allowance for receivable 8,000 has been treated as reduction in allowance in receivable, reduction in allowance in financial statement. Error correction. Which of the following explain the result effect? This result has been doubled. No? Why it's double? The allowance for receivable increase increase in allowance for receivable. They are treated as reduction. Then let's say example, then opening balance 10,000. When it's increase of 8,000, it should be 18,000. Right? But they have treated it as reduction. So then now it has been treated as what? 2,000. 8,000. What is the difference? 2,000, 18,000, 16,000. Impact has been doubled now. Understand? Error correction. 10,000 තිබුණේ අපේ. වැඩි වෙනවා 8,000. එහෙනම් 18,000 වෙන්න ඕනි. But they have treated it as reduction. So then 10,000 minus 8,000. 2,000 විතර තමයි දැන් books වල තියෙන්නේ. එහෙනම් impact එක කීයද? 18,000 minus 2,000, 16,000. What will happen? 16,000 වලින් මොකද වෙන්න ඕනේ? Net profit overstated. Yes, net profit overstated by 16,000. Correct. Why? Because you have treated it as a reduction. Reduction වුණාම අපි කරන්නේ මොකද? මේ reduction න net profit overstated වෙනවා. Right? Net profit overstated by 16,000 and receivable overstated by net profit is overstated by 16,000 and receivable overstated by 16,000. Answer is C. Receivable also same amount වලින් overstated වෙලා තියෙනවා. Right? Answer is C. Error correction. Simple question. Question number 10. At January 1st January 2011, there was an loss allowance for receivable 13,000, 3,000. Yeah, 3,000. So again we have to deal with numbers. Till I erase this board, you can read and understand the question. Right. Opening balance, receivable, loss allowance for receivable 3000. Opening balance 3000. Quickly you should have answered this question, right, since we have done many questions. During the year 1000 debt written off as irrecoverable, 1000 written off, right, and 800 debt previously written off was recovered. Now you have recovered how much? 850. Sorry, 800 you have recovered. Yeah, 800 you have recovered. 31st December 2011, it was decided to adjust the allowance for receivable 5% of total receivable, which are 20,000. So, which amount you will charge to P&L is the question. Now, 1000 is the P&L impairment, right, 1000. Now, closing balance of allowance for receivable also you need to calculate. How do you calculate it? 20,000 is the amount, closing balance debtor, into how much they are charging, 5%, will be 1000. Closing balance 1000. Here 3000. Simple question. P&L 2000. Debit here, credit there, minus 2000, which means a gain to P&L, right. Not only that, they have recovered 800 from previous written off debtors. Then cash credit, debit what? Impairment loss account, right. Cash credit, irrecoverable debit, debtors, debit. So then by that amount, 800 you have to minus, its reduction, 800, because you have recovered it, gain to P&L. Debit cash, credit to here, cash, 800. So then 1200, P&L and 200. Ena make mekuwa, right, 200 debit there, credit there, debit here, and 1000. Sorry, 2000. So then 1800 gain is there to P&L. 1800 gain to P&L, which means answer is B. So answer is what? Credit to P&L. Answer is D. If you look at this answer, you have both 1800 debit, 1800 credit. So you have to be careful, 1800 not debit to P&L, 1800 credit to P&L. Allowance for receivable, an example of which accounting concept? Why do we make provision for allowances? Why do we make allowance for receivable? Accrual? No. Consistency? No. Matching? No. It's prudent concept. Why? If there is a doubt of recoverability, no point of showing the correct, the available carrying amount, you have to show what we can recover possibly. Therefore, based on prudent concept, you have to record allowance for receivable. Question number 12. At the beginning of the year, allowance for receivable 850, again calculations. So same question examiner can be tested in CA Sri Lanka also, right? 850 opening balance, 850 at the end of the year allowance required 1000, closing balance 1000. During the year you have written off 500, impairment 500, which includes 1000 previously included, during the 500 were written off, which include 100 previously included in allowance for receivable, right? What is the amount you charge to P&L? 100 දෙයක් අස්සේ ගහලා අපිට වැඩක් නැහැ ඒක, right? 1000 P&L එකට යනවා 150, so 500 here credit debit P&L එකතු වෙනවා 150 650, right? Answer is 650. Yeah, answer is C. Question number 13, right? Question number 13, which of the following statement is correct? නිවැරදි වාක්‍ය අහන්නේ, right? An age receivable analysis shows how long invoices for each customer have been outstanding. Debtors age analysis, which means from the day you sold, right, all the unsettled debtors you can put into different brackets, 0 to 30, 30 to 60, 60 to 90, right, more than 90. Likewise, you can, all outstanding debtors you can put into these buckets, which is called debtors age analysis, right? Available debtors la tika මේ buckets වලට දානවා. Let's say if I have sold 3 months ago, it's still unsettled this. If I have sold some goods more than, let's say 5 months ago, still outstanding this bucket. Likewise, this will be telling the total debtors, right? The statement says the age receivable analysis shows how long invoices for each customer have been outstanding. Correct. Statement 1 is correct, right? Fine. Thereafter, a credit limit is is the tool applied by a credit control department to make suppliers to provide goods on time. No, that is wrong, right? Credit limit is not a tool to apply by a credit control department to make supplier provide goods on time. Supplier, there we are not talking about supplier, here we are talking about customers. Third one, receivables are included in the statement of financial position net of receivable allowance. Correct. So then answer 1 and 3 should be the correct answer. So then part C is, answer C is correct. Even no need to read 4. Credit limits applied by customers who purchase goods on cash only. No, incorrect. So the correct answer, answer 1 and 3, they are in answer C, 1 and 3, right? Fine. Then question number 14. At the end of, at 31st May 2007, the company's trial balance included following items: opening inventory 23,856, trade receivable 55,742, trade payables 32,165, bank overdraft 5,855, loan due 15,000. What is the value current liabilities as at 31st May 2007? This is not directly linked to trade receivable, but you can figure out the answer, right? Liabilities means trade payable, it's a liability 32,165 plus bank overdraft 5,855. So 32,165 plus 5,855 will be the correct answer, which is 38,020, right? 38,020. Long due for repayment, it is not a current liability, it's a liability of the company, but not the current liability. දැන් බලන්න ඒකට 15,000 එකතු කරා නම් එහෙම 53,000 කියලා ආන්සර් එනවා. සමහර කට්ටිය B කියලා සිලෙක්ට් කරයි. Wrong. They are asking what? Current liabilities. Long due repayment in 2009 is not current liability, it's long term loan, right? Fine. Last two questions. Yeah, question number 15. Question number 15, right? Read it. Sorry. Yeah. At 1st November 2005, Sanjay Motors is owed 20,000 by Jackson for service and repair work carried out on Jackson's fleet of motor vehicles. From Jackson's 20,000 amount is receivable. Of the 20,000 outstanding, 3,500 relate to the work that Jackson feels substandard. Right, 3,500 works relating to standard. Despite discussion and negotiation, and although Jackson's generally a good customer, Sanjay is doubtful that Jackson will ever pay 3,500. So there is a doubt that Jackson will ever pay this 3,500. What allowance for receivable should Sanjay Motors make for account for doubtful debt? Normally, how do we calculate doubtful debt? Provision for loss allowance for receivable, we calculate by using a percentage, that is general provision. But here this is specifically relating to Jackson. So therefore, what allowance we will recognize in Sanjay's books? None. Jackson is good customer, so Sanjay Motors should assume they will eventually pay. No, the relationships are not much important. The substance, and substance is the important part of the accounting, right? Not the relationship. Specific allowance 20,000, as Jack may decide not to pay. Specific allowance for 20,000. This specific provision is applicable for how much? 3,500. Therefore, general provision general allowance of 3,500, that is not the answer. Specific allowance for of 3,500. So answer is D. Specific allowance for 3,500 should be recognized. This is not a general provision, you know, in and out of the transaction, and this is relating to one specific customer. Therefore, specific allowance of 3,500 should be recognized. Right. Question number 16. Right. Question number 16. At the end of its first trading period, customer commencing business, Khan and Company has receivable balance of 500,000. It wishes to provide specific allowance on 10,000. Specific allowance of 10,000. The customer that owes 10,000 is in severe financial difficulty. It is unlikely that 10,000 will be recovered. So 10,000 is specific provision, right? Khan Company also wishes to set up a general allowance of 2%. So then specific allowance plus general allowance you will charge to P&L. So 10,000 we will charge to P&L, and 2% general allowance out of 500,000. 500,000. Now 10,000 already gone for as specific provision. So 490,000 is the remaining amount, out of which you charge how much? 2% as general provisions. So 490,000 into 2%, 9,800. Sorry, 9,800, yes, plus 10,000, 19,800 would be the answer. So then answer is A, right? Answer is A. Last question, right? Last question. At 1st January 2004, Tata Company has total receivable of 380,000. Total receivable of 380,000. Opening balance 380,000. General allowance and specific allowance of 20,000. Specific allowance you know how to charge to P&L. This is the last question. Therefore, it has both general and specific provisions, right? P&L specific provision, anyway you have to charge 20,000, right? And general provision, general receivable 2.5 during the year, DRAB went out of business or in Tata 28,000, right? General allowance 28,000. None of which will be 28,000, none of each expected to be recovered. 28,000 also what? Impairment. 28,000. Then there were no specific, at 31st December 2004, Tata had total receivable of 420. 420,000 is the total receivable. 420,000, out of which you charge to P&L how much? Press 12,600. 12,600 is the closing balance. So opening balance, how much? Here opening balance, how do you figure out? You had opening balance 380,000, 380,000, and you had to deduct 20,000 of it, 380,000. Now you know how to I believe you know how to calculate now, since we have done many examples, into 2.5, 9,000, right? Opening balance, how do you calculate? 380,000 minus specific into 2.5, so 9,000, right? And you have charged specific amount of 20,000, right? Already now 29,000, 29,000, right? 29,000 minus 12,600, 16,400. Debit, credit to P&L, 16,400, right? Minus, so the answer is, you have, I made a mistake, don't worry, we'll correct it. So this is the total amount that you need to the credit to P&L, right, from there. And already you have to debit P&L 28,000, which is this impairment, right, 28,000. So then 28,000 already you charged to P&L minus 16,400, 11,600 is the amount you charge to P&L. Is that answer called 11,600? Yes, that is answer D. From here, P&L, debit, credit P&L, which means you have to deduct, you have to take that gain to P&L. From there, you have a debit to P&L 28,000. So then, net impact to P&L 11,600. So this is the maximum complex questions that they can test. So in this question, in this chapter, what you need to understand, the difference between general provisions, specific provisions, as well as impairment, and the double entries for impairment as well as allowance for receivables. So we have done 17 MCQ questions from ACCA and some questions from your study pack, and we went to theory part also. That will give more confidence to handle any debtor impairment related question in the exam, right? Fine. That's for the day. That's for the session. We'll meet with another webinar relating to BL1 webinar series. Thank you.